Hey, it's Tim. It's 8 o'clock, and we're watching emerging markets generally rallying since Asia closed. But the China data overnight, the macro CPI, GDP, industrial production, retail sales numbers, kind of a mixed story. Growth definitely being questioned, but inflation better. Ultimately, inflation better to me is where the Chinese government can begin to reaccelerate the economy, and you have second half growth fears, which if China's at the center of that, then I think you're okay because China is not going to fall apart here. JP Morgan's out with their second quarter numbers. The numbers are actually pretty strong. Revenues came in ahead of consensus. The EPS is much better. Reserve cuts are kind of the key again. And the reason we talk about that is because the rest of the world is watching to see how the U.S. credit cycle is improving, and even if we have slower growth here, you can expect to see some easing of pressures around the world. But the banks in places like Turkey, Brazil, even Russia are in very good shape. It's really about loan growth for these guys, and it's really about their interest margins. Sberbank in Russia out with numbers this morning. They're very bullish. As we look around, though, last night China traded down almost 2%, and the China Ag IPO only finished up about 75 bips, which based on the history of IPOs there and the previous three other state banks, this is a bit of a disappointment. India, we talked about this level at 18,000, which is very difficult to break through. Market may need the next catalyst. Down about 20 bips, but again, no big move. And as mentioned, the rest of Asia was off slightly. Russia's up 80 bips, recovering from what was at least an underperforming yesterday. Looking at some of the big oil companies that are beginning to follow through. Looking at Brazil opening up this morning, up slightly. U.S. futures up slightly, and we get into the meat of the earnings season in the U.S. So the places where we think are the most interesting to play are the charts that are probably the most bombed out, and those remain the resource names, despite the fact that iron ore prices are falling and steel prices also are marked down again this week in China. A lot of these companies have been priced for kind of a return to double dip global growth. So in the absence of that, these stocks look very interesting, and those would be the places where I think you can really make some money here. Having said that, those are the wildest rides and the most volatile names.